Hi, everyone. Welcome to the Money Coach Show here at Loan and Key. I'm here with Robert, our mortgage advisor, trusted resident mortgage advisor, and the financial guru here, Damien. We're going to go ahead and have a really good episode. If you missed last week's episode, really good episode. Robert's going to include the link. It was a mortgage recap. He just covered 40 years. That was all.
That's all.
No big deal. Nothing major. Anyways, Robert, why don't you go ahead and lead us into the market update, please? Our update report, please.
You got it, Damien. And thank you for last week's plug because you know what? It was a great call. I was able to go over some trends that, that really mortgage rates, that's not the issue. You know what? It's the cost of housing. It's just gone up so much. But you know what? So have ways of income. I digress. Let's go ahead and look at these rates. If we look at last week, today or yesterday's average closing was, conforming loan, that 9.3. You can see it right above me. And then
Ouch.
As I slide down to last week, you can see, 6.9 for conforming. So rates have gone up a little bit, not too much. But again, as I mentioned in last week's video, it's not a rate issue because these are pretty standard, pretty good rates for considering how much money you're being lent. In all actuality, how much money the lenders are giving to you to go buy a home or refinance your home. It's a heck of a lot more than, I'm going to be honest, a lot of the same lenders that will give you a plastic card and say, go spend it.
With 23%. Anyhow, we digress. Today's episode is going to be about mortgage insurance. Mortgage insurance. I'm going to go ahead and lead into this. There's three kinds of mortgage insurance related to mortgages. Every mortgage will go ahead and have to absolutely need hazard insurance. Hazard insurance is a type of insurance that protects against damage or destruction to your home caused by hazards such as fire, vandalism, theft, or you also might want to check with your insurance policy to see if you're covered under storms or floods. This is kind of in like flood zones, flood loans. The lender will know about this as you go through an appraisal. These kinds of issues will manifest. And also, there's a secondary insurance. Robert, do you want to go ahead and talk about the secondary insurance in regards to the three kinds of insurance that are pretty much related to mortgages?
I would be delighted to, Damien. So that is private mortgage insurance. Okay, private mortgage insurance, that can contain two conventional loans. So what that means is if you put down less than 20% on that purchase price, you're going to have private mortgage insurance. So what that means is you're going to pay a mortgage or a premium that's considered insurance that basically is given to the lender, and it allows them to say, you know what, this is to ensure that we're going to be paid on this loan, to make up any lost ground that may be within a foreclosure that sits on the market. They're trying to recoup that money there. That's the only reason why they have it. They don't return any money back to you. So it's kind of one of those things, PMI. It's not that big of a thing to be scared of. But, and you can refinance out of it. Or once your loan to value, your LTV, reaches 78%, your servicer has to drop it. And if they don't, and they continue to charge you after your LTV has dropped that 78% point, you will get a refund by your servicer. And by law, they will have to issue back every bit of money they took from you after that 78% LTV point. So be very cognizant of that. And then there's a third type of mortgage insurance that you would be needed. And Damien, please take it away because this one's a tricky one.
Yeah, no worries. Last but not least is the last one is your government-backed loan, most suited with FHA loans. And this insurance is called the MIP, or simply put, mortgage insurance. Upfront MIP, mortgage insurance premium. That is what the acronym for the MIP is, mortgage insurance premium. It's the one-time fee that borrowers must pay when obtaining an FHA loan. This fee is typically rolled into the amount and it's paid at closing. Though it can be financed as a part of the loan itself, this is normally the monthly fee known as the mortgage insurance premium. This is needed alongside with your normal hazard insurance premium. Now, this will adjust each calendar year based on your LTV amount. I'm sure you've been hearing Robert mention that LTV,
Mhm.
loan to value amount. And it'll get lower over the lifetime of the loan. But the only way to get out of MIP, the mortgage, is to refinance. And that's to refinance into a conventional loan and to have an LTV less than 80%. And at the end of the day, that is essentially your three kinds of insurances that go into mortgages. It's what? It's your hazard insurance, it's your PMI, and it's also your MIP, your mortgage insurance premium. Robert, did we pretty much cover everything in regards to that?
We did, I just want to, as much as I want to reiterate, it's like that hazard insurance, like you said, every loan's going to have it,
Yeah.
PMI, private mortgage insurance, conventional loans can have it, and it's not a scary thing. And the one thing I really want to make sure is that MIP, that upfront MIP, the monthly mortgage insurance, that's something to not even be afraid of. You're getting a better rate, so it's kind of an offset there, so really think of that. And then there's other government loans that would be associated with a monthly mortgage insurance premium like that. Reach out to us at Loan and Key, and if you have any questions about that, we'll be able to discuss that further. And again, you reach out to us, we'll give you a great chart, to be able to show you what you're looking at, apples to apples.
Thank you, Robert. Always a fountain of information, especially when it comes to mortgages. But also thank all of you for tuning in to Loan and Key here, the Money Coach Show. I just wanted to let you know we're really happy to cover these kind of quick topics, but mortgage insurance was the topic today. Thank you for an absolutely fantastic market update report, Robert.
My pleasure.
And other than that, this is your financial guru
Your mortgage
signing
advisor,
out.
Robert. Take care.